Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. It's concerned Friday on the background of the strong statistics from the United States and retail sales in particular was pretty strong. We can see the gold shows the backward action on the daily chart. If you remember last week when the payrolls, at least at the first glance, have shown worse than expected data, although when we dig it a bit deeper, we saw that numbers actually are not bad and mostly stand in a row with the Fed expectations. They provide average surplus to the employment, job created, and it shows moderate inflation in the wages. So that's all that Fed needs to keep its policy, to keep its strategy. And we gently warned that despite that we see on the first glance rather strong action here, it might be not as long-term as it is suggested, and it might be just a pullback in a longer bearish tendency, because market actually has no really strong driving factors. Overall background stands not in favor of the gold currently. Statistics is improving, inflation is rising, economy is booming. The recent earnings report from the banks, from the big companies, shows the significant increase in earnings, in profit of the companies. The shipping is also overloaded. So you can see on the Baltic Dry Index that's the utilization of the cargo ships, cargo vessels. So it's just stands on very high levels. So commodities, by the Commodity Research Bureau Index, you can see stands on top. All these moments represents the signs of the growing of the economy and growing of the inflation. The sentiment on the gold market itself, by the recent CFTC data, by the performance on the ETFs and gold ETFs, you can see stands relatively poor. So we see week by week the outflows from the gold ETFs. And that, all this stuff puts in a whole picture that, just tells that gold now is not good in asset for long-term investment. So if you consider gold as an asset that you would like to put the money for a year or two maybe, this is definitely not the moment that it very good to do. So it's just the question of the economy cycle. On the growing economy, the gold not the best asset to invest in. In the shorter term, yes, we could get some bounces, some short-term bullish setups as we have actually this week, but all of them will be probably short-term. And currently, by looking at the daily chart, we could say that, well, by letter, market is still keeping the bullish context here on the daily, because we have some frosting action. Market shows higher lows and high highs, shows even some signs of the good acceleration here and here, and trend stands bullish. But we have few signs that, put the shadow on this perfect composition. First of all, if we'll take a look at the weekly chart, you will see that trends there stands bearish. And in fact, by following the Judd Napoli approach, market shows a reversal right at the 618 resistance level, forming the retracement type of action. So A, B, C, D, this is the retracement type of action. So in fact, we have here some kind of the garbage triple too. This is not because I call for trading, because mostly it's already has completed its minimum target, but just to explain the retracement feature of the current price action. And in terms of the Judd Napoli approach, we fade bullish daily trend against major resistance with a weekly bearish trend. So this is just a retracement inside of the longer term weekly trend. So overall weekly daily context stands bearish. Here as well also you've got the sharp reversal. But not only this moment makes me think that, well, currently it's not very good idea for taking the long position on the gold market. On the 4 time frame chart, we could see also a couple of things. First of all, ABCD and target of the head and shoulders pattern mostly is completed. But if you'll take a look at the target of the head and shoulders precisely, because it should be right from these points, right from the neckline, the correct target should be calculated. So here this ABCD is a starting ABCD pattern, and its OP is been done. It's a good point. But at the same time, the target of the head and shoulders has not been completed. So market was not able to complete the OP of the head and shoulders. So it has been ignored, and market has collapsed down. So you can see that price dropped below the neckline, in fact destroying the context of the head and shoulders pattern, and it's really minimum chances right now that market reverse up and keep going higher. Besides, market is returning back on this consolidation. So the first confirmation, all this indirectly suggests the bearish context here, because this breaks the normal behavior of the bullish market. This is not the way how market should behave if it is bullish, and in fact, when, especially if you have this actual fast acceleration, so you can see very sharp reversal and erasing the whole rally that we've got before. This is not good. And the first confirmation of the bearish context we could get once market will drop below the C point. In this case, it will destroy any ABCD pattern here, and this breakout will tell you that probably the bearish tendency is returning back, and we should get the new extension to the downside. This is really what could happen on the gold market, because, well, guys, currently I do not see any reasons actually trying to find something interesting, something bullish in different spheres. So maybe on the interest rates, maybe somewhere, so some relief for the gold market that could let us to at least theoretically find some background for upward continuation, but actually I do not see it. If you will take a look, for example, on the same interest rates, you could see that's turning up again. So on Friday was good performance based on retail sales, and actually the gold market starts dropping. So this is the first area to keep an eye on. This will be some, let's call it as an intermediate decisive point. Absolute vital point stands here. It will tell you that if market will take out the A lows, it's 1720. That's definitely suggests we should get some kind of A, B, C top D pattern somewhere to 1650, whereas actually we have some longer term targets, as you know. But in the shorter term, this will be very important. So in breaking down this level, it will be an important confirmation of the bearish context. So taking into consideration all this stuff, and by looking at the hourly chart, here we also have another bearish sign. So if you remember, here we also had another confluence, and we said, well, bullish market should stay at this confluence, and it's possible to take the position with the stop somewhere below the second confluence. But you can see market was not able to stop there and drop right to the second confluence. Currently, it's trying to hold here, but the price action stands too fast. And this is indirectly also suggests that probably market is not as bullish as it seems. So since here we have nice thrusting down, I suggest that taking into consideration all the things that we have just discussed, we could starting to watch here for some kind of the bread and butter trade, and this will be a great chance for trying to take the short position. So for instance, if market will able to show some technical bounce up from here, somewhere around 1780, 1786 level, it might be interesting trying to, or at least consider taking the short position with the stops above the stop. Because if we are correct on the bearishness of the market, hardly we will see any action above this area anytime soon. So that's actually the few moments that we intend to keep an eye on the gold market in the coming week.